You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is John Rubino, author of several books on the economy, including The Money Bubble. His website, dollarcollapse.com. Welcome to the show, John.
Hey, Jim.
Janet Yellen, boy, she can't wait to start interfering again. She says she is looking forward to increasing interest rates in the U.S. because the economy is now doing so well.
Yeah, it looks like we've seen all the stats we need to see for the Fed to raise rates next time they meet during this month. And she's couching it as a sign that the economy is, growing well enough to tolerate higher interest rates. And, you know, the Fed really wants to raise interest rates in one sense, because higher rates give them ammunition. In the next downturn, they can cut rates if rates are already fairly high. But if rates are already extremely low when the next downturn happens, then they don't have this tool that they're used to having to combat downturns. And they would have to push interest rates down into negative territory in order to get any kind of a pop from lower interest rates. And they don't want to do that if they can help it, because that's really uncharted territory. When you start actively engineering negative interest rates, you're running an experiment that has never been run before on a large scale, and whose results are therefore hard to predict. And so they'd rather not have that happen. They'd like to get interest rates up at the low end, or the short end of the spectrum, to 2 or 3 or 4%, which is more historically normal. And then when there's a downturn, they can cut rates from 4% to 1%, like they've done in the last couple of downturns, and hope that it slows down an impending recession or moderates it or restarts growth or whatever. And so that's what they're hoping for. The problem is that you've got the rest of the world's central banks easing, in some cases fairly aggressively, and the dollar's already really strong. So if we're the only monetary system that's tightening conditions, the rest of the world is loosening, you'd expect the dollar to go up further against the euro and the yen and the British pound and the Chinese yuan. And that would make life harder for our multinational corporations to make money overseas. And they're already having trouble. You know, corporate earnings in the U.S. are down now for the entire year. And top-line growth, revenues, are down hard. So another year of a too strong dollar would give us another year of serious decline in corporate earnings, which is one of the things that underpins the stock market. So you create the conditions in which equity investors can be spooked by falling corporate earnings, and you get a bear market in stocks, which slows down the economy, which exacerbates the effect of higher interest rates and a stronger dollar, and you get way more restraint than you expected. And that's the risk that the Fed runs right now. You know, we really have just borrowed too much money, so there aren't very many policies that can still work on the traditional palette of monetary responses to a changing economy. So we are in uncharted territory, and the Fed is trying to restore normalcy, but I think they'll fail. You know, one interest rate increase of a quarter point or whatever doesn't make any difference in any event. But let them continue to raise interest rates from here by a significant amount, and you'd have a huge effect on the overall economy that would cause them to reverse course right away. So this is probably a little blip. I think the Fed in 2016 is going to have to join the rest of the world in easing, no matter what they do in December.
The Canadian Central Bank has kept its prime rate at 0.5%, no change there. Do you think they're anticipating a rate hike?
Well, Canada's got a separate set of problems from the U.S. because you guys are a resource exporter on a scale that we are not. And so if oil keeps falling, that's already, in effect, serious tightening for the Canadian economy because you get so much less revenue from your energy-producing sector that in normal circumstances can cause a serious slowdown, and that's kind of what's happening right now, right? Is Canada in recession yet, or are they just trending towards it, or are you just trending towards it?
Well, I think they're treading water. The oil and gas sector just reported that their capital spending in Canada is down 35% year to year.
Yeah, okay. Which makes sense. I mean, a lot of these, especially the kind of new technology energy projects, were very high cost. And so they need $60, $70, $80 a barrel oil in order to be profitable. And so lower oil to $30, $40, $50 a barrel, which looks like the range where it's going to stay for a while. And a lot of projects just aren't viable anymore. So same thing in the U.S. You know, we have the Bakken oil fields in Montana and the Dakotas that are contracting dramatically, and Texas is seeing a huge number of layoffs in the energy sector. And so that's just the nature of fluctuations in the oil market. It happens every 10 years or so that prices spike and then they plunge. And so we're seeing the plunge part of that now, and a lot of people are being laid off. And you know, the sad part is those are good-paying jobs. We're especially in the U.S., we're hiring bartenders and waiters and laying off oil field workers. And so the jobs that actually allowed someone to support a family are still going away. And the new jobs that are being created are the kinds of things you do as an interim stopgap measure while you're waiting for your actual career to pick back up again. So there are lots of reasons, even though, you know, we're arguably in a recovery in the U.S., there are lots of reasons to think that the recovery is way suboptimal and short-lived, because as the layoffs pick up in the energy sector, that could swamp the increase in waiters and bartenders. And in any event, the economic costs of layoffs in good-paying, goods-producing sectors probably is going to end up outweighing the economic benefits of increases in the service sector. So I would say in 2016 there's a good chance that we join you guys and Europe and Japan in just either treading water or actively rolling over, you know, and that a global recession is very possible by mid-year 2016, just because so many of the factors that are building right now, so many of the forces that are in play are negative. You know, if energy, oil prices go down again, which it looks like they could easily, because we're running out of places to store the oil that the world is producing. And historically, when you use up all the storage capacity in a sector like that, the price has to crack. It has to go down to the point where usage increases and production decreases to bring it back into balance, so we're not overwhelming our storage capacity anymore. And it looks like we might need $30 a barrel oil, $30 U.S. for West Texas Intermediate. And should that happen, that'll accelerate the layoffs in the oil patch. So I don't know. It looks like 2016 is going to be, regardless of what the Fed does right now, you know, whether they raise interest rates by a quarter point or not, 2016 is going to be a very, very challenging year. And not just in North America. I think the whole world is looking at an accelerating descent into deflation in Europe and a credit crisis in China and a demographic trap in Japan that it's not clear how they get out of. You know, their population is just aging so fast that there's no real way to generate growth if the number of 65 and older citizens is growing faster than the number of 18 to 35-year-olds.
I would think, though, I mean, if Japan wanted to be generous to itself, there's 2 million Syrian refugees in Turkey alone. I'm sure Turkey wouldn't mind sending some of them over to help out younger people.
Well, that's always been the question with Japan is, you know, because they've seen their demographic issues have been coming for a really long time. They've seen them coming. But they've chosen not to try to solve the problem via immigration. And I don't think immigration has turned out to be the solution for Europe, because that was how they tried to solve their problem. They decided to take millions of people from their former colonies in Africa and the Middle East, and that hasn't worked out too well for them. And in the U.S., we're accepting a lot of immigrants and dealing with the fallout from it, but it hasn't been nearly as serious as Europe's issues with immigration. And so we here demographically are in not great shape, but much better shape than Europe and Japan, in the sense that we're not aging as quickly on average, because we've got a lot of young people able to take up the slack to an extent for the baby boomers who are retiring now. And Jim, you guys in Canada, you could take a lot of immigrants if you wanted to.
We got a lot of space, except in places like Vancouver and Toronto, where everybody wants to go.
Yeah. That's always how it works. It leaves a lot of open space in between the big, cool cities. But you guys have a fairly strict immigration policy, though, right? You have to jump through a lot of hoops.
Oh, yes.
And I think that's a good thing. You know, in our case, we just aren't able to control our borders very well. But I think a rational immigration policy is one that decides who it wants, you know, who should be allowed in, and what criteria should be used, and then enforces that criteria. And in a lot of cases, in the better run immigration systems, they look for people who are more likely to contribute immediately to society. In other words, do you speak the local language? Are you well educated? Do you have connections already in place here? You know, things like that. And so instead of just opening the borders to everybody, you know, just get in line and come on in, places like Canada and Australia try very hard to choose the most appropriate candidates, and that's probably the best way to do it. And it's not easy to do it, especially for big countries, but that would be the way to do it if we were going to do it right here in the U.S.
Well, Canada has decided it wants to take 25,000 Syrian refugees, but women and children first. They don't want young single men.
Yeah. Okay. Well, that's
just for the security reason.
Yeah, for security reasons. I totally get that. You know, see, there's no way to do immigration via criteria without there being an element of apparent cruelty involved, because you're saying no to a lot of people, most of whom are basically cool. You know, they're trying to achieve the same thing that you and I would try if we found ourselves in a place with no jobs and a civil war. You know, they just want to protect their families and they want to protect themselves, and they're trying to get to a place where they can be safe. And to the extent that some of them have to be denied, that's a tragedy. But I think we should take a couple of steps back further and accept that a lot of the turmoil in the Middle East is our fault, you know, and that you can go all the way back to the post-World War I days when the European powers just randomly drew lines on the map in the Middle East and created these countries that were really never viable to begin with. And then the U.S. and Europe intervening time after time after time in the Middle East and basically creating these crises. So, I don't know. You know, we have some responsibility for what's going on over there because we caused a lot of it. So there aren't any easy solutions here. And we're heading into a world where that's going to be the case in more and more areas of life, really. We've run out of financial wiggle room in a lot of cases, where there isn't much left that our central banks and central governments can do to stimulate economies that are already grossly over-indebted. And then we've got geopolitics around the world that is getting scarier and scarier all the time. I don't know if you saw the announcements lately, Jim, about the new super weapons that are being developed out there. But Russia now claims to have a torpedo that can deliver a nuclear weapon to the shoreline of an enemy and create a radioactive tsunami. that washes over a city and then irradiates everything around that city for years to come. And they've got what looks like a kind of a ray gun, a super jammer that shuts down all electronic communication in a battle theater, so they can blind satellites and cause cruise missiles to spin out of control, and et cetera, and presumably take down commercial airliners too. And the U.S. has robot submarines that they can just turn loose in the ocean to behave the way drones now behave in the skies over the Middle East and other places.
Yes, and I just saw a new assault rifle. It's about 2 years old that has laser sights on it that work the same way, I guess, as a Steadicam does. Once you put the little laser dot on something, it stays locked on it. So you become an expert marksman instantly. You don't miss.
Wow.
$17,000 a copy, about 20 grand Canadian.
Well, it seemed like at the turn of the century that weapons had become so fearsome that they would never be used. We were never going to have a nuclear war because that would be crazy for everybody. But it looks like we've come up with some even more fearsome weapons now. And you can hope that the devastation that would happen if we used a lot of these things would be enough to keep people from ever using them. But I don't know. These guys are really rattling their sabers now. We've got the U.S. and China in the South China Sea kind of bumping up against each other, and Russia and NATO shooting at each other's planes and people in the Middle East. So we're on the verge of a really dumb mistake causing things to spin out of control, and we have to hope that everybody is clear-headed enough not to allow that to happen. But history doesn't really give you a lot of cause for optimism on that count. So many wars get started via miscalculation, where somebody thinks they can get away with something, they go ahead and try it, and then they can't get away with it, and then the rest is history. And so we're in one of those places now, and I really hope that, especially as the father of two draft-age sons, I really, really hope that all we get in the next 10 years is a financial crisis and not an accompanying geopolitical crisis that turns into some kind of crazy war.
Well, I love it. My nephew in Edmonton asked me once, Uncle Jim, how come you weren't in the Korean War? I said, well, for the first thing, I wasn't born yet. Just lucky that I wasn't born yet, too young for Vietnam, and now too old for anything else.
Yeah, there's a big section of the baby boomer generation that we timed it just right. We came after Vietnam and before the Middle East, and our kids might not be that lucky though. So yeah.
I've attended enough services for young Canadian personnel and journalists who've been killed covering wars that those people were fighting in. It's never a pleasant experience, and yet I don't know why people want to charge towards it. It baffles the average person's mind.
Yeah, the idea that we can fix the Middle East is just crazy. It's irrevocably broken.
No one's fixed it in 15,000 years. Why would you start now?
Yeah, and that's something that these guys just have to work out. And if the great powers just left the Middle East to its own devices and let them work out their issues over religion versus government and all the rest, the Sunnis versus the Shias, there would be a coherent society to deal with after it all got sorted out. And that's probably the best we can hope for. It would be pretty bloody, but it's not something that we can control. And this idea that we can control it is just costing us a fortune in terms of money that we spend over there and lives that we lose and markets that are distorted. And, in the U.S.'s case now, we've got the Petrodollar that we think we need to protect, which is the deal that we struck with Saudi Arabia back in the 1970s, through which they would only accept dollars for oil, U.S. dollars for oil. And that has made the U.S. dollar the world's reserve currency, or at least solidified its position as the world's reserve currency. And you take that away, and the dollar may not function as the only major store of value in the world anymore. And so we're afraid of losing that. And so we feel like we need to intervene in the Middle East to protect Saudi Arabia and ensure the flow of oil and keep stability there. But, we're failing miserably, and it doesn't look like it's going to get any easier in the future. So had we just withdrawn from the Middle East and not intervened in it in the first place, we'd be a lot better off today.
We'll have more with John Rubino right after the break.
Unbelievable harmonies, spectacular performance, the ultimate tribute to the Everly Brothers and Simon and Garfunkel. Bird Dog and the Vintage Electric Band, Saturday, January 9th at the Alex Goulden Hall. Buy online and save at ontourtickets.com. See singing impressionist Andre Philippe Gagnon.
And I think to myself,
In Oliver, December 29th. In Kelowna, December 30th. Buy online and save at ontourtickets.com.
Welcome back. We're speaking with John Rubino. John, the World Monetary Fund has now accepted the Chinese yuan as one of its reserve currencies. It goes into its basket. How soon before the yuan surpasses the U.S. dollar?
Oh, it'll be a long time. But it's an ongoing process. Right now the U.S. capital markets are so deep and relatively transparent that it's still the place where if you've got a lot of capital and you're worried about what's happening domestically, this is the place where you move your money to hide out. And China, because it's the second biggest economy, should definitely have its currency in the basket that makes up special drawing rights. And the yuan should be used in a lot of bilateral trade, and that's happening. So it's an ongoing process of other currencies becoming more and more functional for international trade. The yuan, the yen, the ruble, the euro is already, to an extent, a reserve currency, and the rupee. And as more and more currencies start to be accepted in international trade and to an extent as stores of value, then the dollar becomes relatively less dominant. And so over time that'll happen. The dollar is going to be one of many in a few years rather than the currency in the world. And at that point, the people who hold dollars as reserves won't need to hold as many, and they will need to hold more of these other currencies. So you'll see a gradual shift. And that, however, is if we don't get some gigantic financial crisis in the next couple of years, which we easily could. And then that kind of throws out the playbook. Then you just have chaos and everything gets sorted out eventually, but you have no idea how and on what time frame. But in the meantime, China is definitely a rising power, financially and militarily and economically and in every other way. And so you would expect to see the yuan be used more and more in international trade. And it's happening already. They're cutting a lot of bilateral deals in Asia in which, for instance, Russia will sell oil to China, and they'll use their own currencies for this transaction. They don't have to bother with the dollar anymore. And to them, that's a win-win because it means their currencies become more important relative to the dollar, and the U.S. loses a little bit of the power that comes from having the world's most powerful currency. So it's part of the process of these regional powers asserting themselves in their own neighborhoods and kind of throwing off the yoke of U.S. domination, and us fighting it tooth and nail the whole way, but in the end not being able to do anything about it.
Well, Canada, of course, has created yuan trading hubs. Toronto has one. Vancouver's about to get one. And it would be North America's first yuan clearing bank and trading hub. So, for Canada, although Canada's had diplomatic relations with China long before the U.S. did, and we continued to have relations with Cuba when the U.S. refused to have any. So we're not absolutely scared of communists. We don't mind trading with them, but as long as we can beat them in hockey, I think we feel okay.
Well, you can beat anybody in hockey, right?
Well, the U.S. has won. Russia's won several times. It all depends who's playing where. But, it's more of a joke. If just winning hockey games ruled our economy, Canada probably would be great, not including the Maple Leafs. So you have to admit that. The joke here is, what do you call 25 millionaires watching the Stanley Cup final on TV? The Maple Leafs.
Well, maybe next year.
Yeah, they do live in next year land. John, thank you very much for chatting with us.
Sure thing, Jim.
My guest has been John Rubino, author of several books on the economy, including The Money Bubble, his website, dollarcollapse.com. You're listening to HowStreet.com Radio. Find us on Twitter at Talk Digital Net. Our YouTube channel is Talk Digital Network. Comments about the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com Radio is a production of How Street Media Incorporated.